This is the Asia Trade. I'm Avril Hong in Singapore. Your top stories this hour. Asian stocks set to extend losses on Wall Street amid worries over AI disruption, tech profits, and commodities weakness. Gold and silver tumbling as traders seek safety in treasuries. Rising anxiety over the impact of AI has investors reassessing risk across industries, with logistics the latest sector taking a hit. And the US and Taiwan seal a trade deal to cut tariffs and open markets, but uncertainty remains over investments in chip making. Now, big day for markets, a lot of turmoil. There was a sudden sell-off across the board, and this was amid these renewed concerns of whether massive investments in AI will materialize. But of course, it's also about these concerns that US companies are under threat of AI, so it's now spreading across sectors. Previously, some of these more insulated sectors are also getting hit, including industrials. Overnight, we saw the Nasdaq 100 at one point falling by the most since November, and US futures are pointing to further steep losses. Although on Nasdaq 100 futures, maybe we can see a bit of a bounce. Take a look at the volatility that has also been ticking up as tech struggles. Now, the logistics sector was the latest casualty of the so-called AI scare trade. Take a look at this board. We actually also saw the Russell 3000 trucking index plunging at one point by a record. If we can take a look at some of the stocks that were affected. And this rout on Thursday was sparked by this update, right, in a quite little known AI logistics firm. And the idea behind that is that it can help customer deployments and scale freight products. So you're seeing these double-digit declines on some of these trucking-related names. Take a look as well at what we're seeing in real estate. Yesterday, we already saw some of that playing through in markets. Now it's spread to commercial real estate, and those stocks there are nosediving as well. Traders are now fretting about the risk to demand for office space. Now, it's also about what we're seeing in investors covering those losses and selling commodities. So precious metals were also hit. Take a look at how silver and gold fared overnight. It's interesting how the haven demand creeped in for treasuries. And this was, of course, after jobless claims that was higher than expected. We also have the US inflation print that's coming out. Traders are going to be searching for clues on the Fed's path. Joining us now is Shelby McFaddin. She is portfolio manager at Motley Asset Management. Shelby, it's great to see you, especially on a day like that, where there seems to be, according to some, indiscriminate selling in the markets. What do you make of these moves? I mean, these AI concerns are not entirely new. Why is everything coming to a head now?
I think what we're starting to see is something really tangible. So even when we're in the sort of early innings of AI, a lot of it was something you couldn't quite hold in your hands yet. It was a lot of promises. And then as we started to move forward, we started to look at things like backlogs. And then we started to look less at just the semiconductors and more at, okay, who are the enterprises buying these things? Now we're in the next step, which is who gets disrupted versus who can complement their enterprise on account of all of these different offerings. So that started this sort of watershed moment for software that started sort of in the early innings of January, and now we're starting to see it spread a little bit more. Now we're starting to even think about labor implications, which I myself didn't think the market would start to consider for maybe another couple of months. So it seems that now maybe some investors are doing a little bit of a spiral where it's how many things does this touch? Is this a sort of splatter where we need to look all around the room and find all of the different places that there is this sort of AI residue? Seems to me that that's the market's conclusion right now.
What do you think the next sectors that we should be paying most attention to could be? Is it the ones that are, charging high fees, very labor intensive?
Mm-hmm. I do tend to think it will be those sectors where you rely a lot on pricing and where pricing relies a lot on certain inefficiencies. So when we think about what's going on in industrials and in logistics, if you even break it up into what type of industrial companies are we looking at? Are we looking at something that's materials versus something more like consultancy work and architecture and things like that? The pricing dynamics there are different. When we look at logistics, there are a lot of pricing elements built into just the the inefficiencies that firms don't necessarily have to fess up for. So this is not my suggesting that all of the greatest, largest logistics firms that were punished today are grossly inefficient, but it is something that you can price for. Being able to just say, this is our fuel surcharge instead of having to invest in maximizing truckloads. Well, that's something that the market said today they don't think they're going to tolerate. So it really is going to depend on how much of your pricing goes into things like just human error and other commodities that could be optimized for using AI.
You highlighted some of this earlier in the sense of jobs anxiety because of AI, and that seems to be creeping in to language from US officials as well. How much of that is then going to be a headwind for stocks?
It could be a headwind as we go forward, maybe looking into the 12 to 18 month period. There was a lot of chatter after Super Bowl Sunday because a lot of the ads here in the US were essentially geared towards you can do this with less labor. And it was something that was really shocking because really up until now, it's been a discussion within enterprises. And so the concept of AI sort of coming to your doorstep in that just almost sort of forceful kick the door in kind of way, I think was a little bit jarring, not just for Americans on their couch, but it made investors think a lot. And so it's going to take a little bit. There are lags with these sorts of things. We're probably in the early innings of getting that initial sort of set of things like layoffs. The tech layoffs have started long ago. So other industries sort of deciding where they can get operational leverage, get that OpEx leverage. It's going to take a little bit of time. I wouldn't expect to necessarily see it in the next 6 months. I think a lot of companies might be getting ahead of themselves if they go ahead and chop a big portion of their labor force under the assumption that it can be replaced. I think you're going to see a lot of testing and determinations of whether or not that can happen. Maybe in a year from now, we might start to see quite a bit more labor dislocation.
And yet the markets have already voted investors as well. I mean, how do you position when you don't quite know when a new AI tool is going to pop up from one day to another? How are you advocating at this point?
The best thing that we can try and do is continue a repeatable process of looking for high quality names. That's a 4-pillar process for us. We look at management, culture, and incentives. So who's running the company? What are their objectives? How do employees feel working there? We look at the economics of the business. Can they deliver for a growth mandate or a core mandate? We're looking at competitive advantage. What do they have up against their peers? And trajectory. Where are they going? Now, here's the thing about what's going on with AI. The trajectory for a number of companies in the market is one where that watermark is coming down. So what we're looking for are companies that are going to have stronger sales, bigger ballasts for when the water level's coming down, but they're not going to be the first to capsize. So that's the best that we can sort of do without having a crystal ball, is trying to find those companies that have that sort of defense. Not to say that we're only looking at defensives, but how can they compete against their peers when everyone's looking in the same environment? That leads us to being in a multi-sector kind of situation. We're not limiting ourselves to, abandoning all of our software or leaving financials. You just have to be quite a bit more specific. And then we tweak our allocations a little bit. But when you've got a long-term hold perspective, you get a little bit more flexibility.
Yeah, some see this software route as a buy opportunity. Shelby, it's been great to get your insights. Thank you so much. Shelby McFaddin is portfolio manager at Motley Asset Management. Now let's take a look at how Asia is faring in the early goings as well. Following the rout on Wall Street, it's hard to think how Asia markets can be immune to some of these ructions. We are seeing the ASX 200 pulling about 0.8% lower. Now, against this backdrop, it's interesting how Nikkei futures are pointing to some upside, and this is despite the relative strength in the Japanese currency. The Nikkei closed flat just a day ago. Taking a look at the yuan as well, that has been overall on this rebound. Now, watching these trade-related developments, because Washington and Taipei have finalized a trade deal to cut tariffs and to boost market access for U.S. products in Asia. Goods from Taiwan will now face a 15% tariff, with some exceptions for tech and pharmaceuticals. Taiwan is pledging to buy $44 billion of U.S. energy and further open its markets, but uncertainty remains over Taipei's promises to invest hundreds of billions in U.S. chip making. Let's bring in Bloomberg Washington Deputy Bureau Chief Laura Davison. Laura, Laura, so we now have this finalization of a trade pact. What more do we know? What are the details?
So the details, include that top line, a decrease in tariff rates down from 20 to 15% for Taiwanese goods entering the U.S., as well as commitments from Taiwan to purchase U.S. energy products, as well as some agricultural products as well. The big question mark around this deal, though, are these chip investments that were part of an initial announcement that came out in January that outlined $500 billion worth of Taiwanese investment into the U.S. chip sector, 250 of that coming from private company investments, an additional 250 billion coming from the Taiwanese government in the form of loan guarantees. This document doesn't detail any of that, so it leaves some room for interpretation here on exactly how that could get played out, and also, of course, leaves an opening for Donald Trump to get upset with how this deal may be playing out, and again, threatening to increase tariff rates on Taiwan in the near future, not unlike what we saw happen with South Korea just a few weeks ago.
Yeah, I was just about to ask you if there's a perceived slowness in terms of investing into the U.S. What are the risks potentially for Taiwan, but also cognizant of the fact that maybe the U.S. sees Taiwan having some strategic importance. So does that offset some of these risks?
Yeah, there are, a handful of factors weighing here. One, that, the U.S. and Trump in particular has not been particularly good at holding to these trade agreements once he's announced them. Trump also, has been privately weighing this week whether to pull out of the USMCA, North American Trade Pact that he negotiated in his first term. So there's a lot of questions about if a deal is struck today, how much staying power does that really have? There are also some counterweights at home in the opposition party in the Taiwan government. Has expressed some concerns about this, particularly about allowing U.S. agricultural products, meat in particular, to enter the market. Plus, the kind of the underpinning of the U.S.-Taiwan relationship is this military relationship. The U.S. is Taiwan's main military backer, and Taiwan is worried that if the U.S. is no longer as dependent on Taiwan, that could change the balance of that relationship. However, a win for Taiwan here is they did get this agreement finalized before Trump's scheduled meeting to meet with Xi Jinping in April. This was a concern that, if this deal was still out and really open for negotiation, that, Xi Jinping could get Trump to back down on some of these key things that the Taiwanese want.
How much does Trump's policy on tariffs, though, kind of depend on whether he gets the backing domestically from the Republicans?
Yeah, so right now there's a big political fight playing out over tariffs. We saw just yesterday House Republicans, at least a handful of them, really rebuke Trump over his tariff policies, breaking with their own party and siding with Democrats. Right now, this is really a more of a political fight than a policy fight that will have actual implications. Trump is able to block these bills from becoming law. He can veto them, but this is a sign that Republicans are in a growing discontent with these tariff policies, and it could be a liability for them in the midterm elections, which could really cause the whole party to sort of reevaluate, is this the path they want to go down? Trump has enjoyed a lot of support from his party thus far, but we're starting to see cracks in that coalition.
Laura, thank you for bringing us the latest. Bloomberg Washington Deputy Bureau Chief Laura Davison. And you can also explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more in one place. Check it out at bloomberg.com/videos. This is Bloomberg.
February 24th, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
Bloomberg has learned that Venezuela plans to grant more oil production land to Chevron and Repsol. Sources say officials in Caracas are preparing to award the exploration and production blocks as soon as this week. U.S. Energy Secretary Chris Wright has toured a project operated by Chevron in Venezuela's Orinoco oil belt. Washington's pushing for private companies to rebuild the nation's energy sector. The U.S. Energy Secretary also says Venezuela's acting president, Delcy Rodriguez, is happy to have America's help in rebuilding the oil sector. Wright is the most senior U.S. official to visit since the capture of former President Nicolás Maduro. He told us there's reason to be optimistic about Venezuela's desire for reform.
The last 5 weeks have shown absolutely yes. We've worked very careful with interim President Rodriguez. She's made enormous changes very rapidly, starting January 5th. We already see a better business climate for Americans. We see smiles on Venezuelans' faces. We see local businesses here now optimistic about their future, talking about a return flow of Venezuelans if things continue on this path. So yeah, I think great optimism.
The president at one point said the U.S. was in charge of Venezuela. What does that mean on the ground practically?
I think it meant that 20-plus years of failed diplomacy have failed to change the trajectory of Venezuela. And now, with, again, a very groundbreaking approach, we have so much influence over Venezuela that we're able to nudge things in the right direction, maybe more than nudge. But I think we're aligned. What's in the best interest of interim President Rodriguez is to enhance the lives of Venezuelans. As society opens up and moves towards democracy, you got to be popular with the people.
Some might hear nudge and think leverage. What kind of leverage potentially does the United States have and is using?
The big leverage we have is we're selling the oil that's produced and exported from Venezuela. This has big advantages for Venezuela as well. We're getting more than 50% higher dollars per barrel for the sale of that oil. We're removing a lot of the corruption that was associated with that, and we're able to direct those funds to the government and people of Venezuela, but we have discretion about continuing to direct those funds. It forces us into a partnership to drive improvement in Venezuela and improvement in American-Venezuelan relations.
Chevron, where we are, has been in this country for 100 years, so they're ripe potentially to expand production. But what about others? Are you going to be releasing new licenses for oil companies to produce in Venezuela and expand production?
Absolutely. We've already released a general license for all American and, in fact, international oil and gas companies to come down, meet with officials, investigate possible deals, and then just come back to us when they have specific deal terms. We're releasing soon licenses that's going to allow the import of parts and services, so giant oil processing facilities like we're here can be upgraded and modernized.
Any new licenses or deals that potentially could be announced or that would be coming out of this trip specifically?
Well, Chevron is being enabled to massively grow their business here. They're the largest producer in Venezuela today, and they're going to be able to both expand the reserves they have and expand their operations. We're going to see a pretty good clip in rising Chevron production over the next 18 to 24 months in Venezuela. They're just one of many, but they're going to be a big one.
U.S. Energy Secretary Chris Wright speaking with Bloomberg's Anne-Marie Horden in Venezuela. Some other top global headlines we're following. Russia has set out proposals that could see it embrace the dollar again as part of a broad economic partnership with the Trump administration. A Kremlin document reviewed by Bloomberg says Moscow sees shared interests with the U.S., including investments in natural gas and critical raw materials. The plan would be a reversal of policy and could weaken the relationship between Moscow and Beijing. Australia's main opposition party has ousted its leader, Susan Lee. She's been dumped just 9 months after the Liberal Party suffered a crushing election loss and following further sharp declines in opinion polls. In a swing to the right, party lawmakers in Canberra have elected Conservative former Shadow Treasurer Angus Taylor as their new leader. President Trump says he can see negotiations with Iran stretching for as long as a month as he seeks a diplomatic agreement that would roll back Tehran's nuclear ambitions. He also says it will be very traumatic for Iran if it fails to reach an agreement. Trump's comments came a day after he met with Israeli Prime Minister Benjamin Netanyahu at the White House. And as we watch developments between US and Iran, it's interesting to see how oil prices came under pressure. That selling was pretty steep in the session overnight. It's looking flat on New York crude for the moment, but these assets, commodities, were really part of the risk-off as investors sold to cover their stock market losses. You are seeing gold holding out at that 49.20 level. Take a look at what we're seeing in some of the miners in Australia. They have also been coming under some slight pressure. The likes of Northern Star, of course, this is despite some of these strong earnings that have been coming in for the gold miners down under. Also watching some of the lithium-related names. We have US miner Avril, and it has actually missed the mark when it comes to earnings. So lithium prices, lithium miners are also in focus. We have more ahead on the Asia trade. This is Bloomberg. Watching the latest developments in tech as well, OpenAI has warned US lawmakers that its Chinese rival DeepSeek is unfairly extracting results from leading US AI models to train the next generation of its chatbot. Let's bring in our China correspondent, Min Lo. Min, tell us about these accusations from OpenAI.
Yeah, these are quite serious accusations. OpenAI is saying that DeepSeek has been distilling knowledge from OpenAI's models to train its own next generations of chatbots. And distillation is a technique where you can think of a company using a so-called like a teacher model, a model that is more well established, more knowledgeable, to train a newer student model instead of training them from scratch using large amounts of raw data. So it's a more efficient way and cost-effective way of training a new model. And this is not new because Microsoft, even as far back as a year ago, soon after DeepSeek launched its first model last year, Microsoft, being a tech partner of DeepSeek, had alerted a tech partner of OpenAI. It had alerted OpenAI to their observation that employees they believed to be linked to DeepSeek were accessing OpenAI's programming interface, or API, which are accessible to software developers who pay a fee to license them in order to integrate them into their own applications. So that was a year ago, and now OpenAI is saying they're noticing more sophisticated methods of accessing OpenAI's models by using third-party routers to mask their source. They are also noticing that DeepSeek's employees are writing codes to access OpenAI's outputs in a, quote, programmatic way. So, of course, this is a serious accusation that would potentially puncture the credibility of DeepSeek if it were found to be true.
Yeah, I was just going to ask, what are the possible implications then for DeepSeek, and might this have ramifications for US-China relations as well?
Yes, so OpenAI has written a memo to the House China Committee. This is what Bloomberg has seen. And I mean, it could lead to potential debate among U.S. lawmakers, potential retaliatory actions on DeepSeek and on China, because already we have a Republican lawmaker responding to this, saying that this is classic Chinese Communist Party playbook to steal, copy, and kill. So, you know, hard to say what could happen next, whether there would be sanctions on DeepSeek, whether it would be placed on a blacklist, or perhaps, you know, rolling back some of the loosening of restrictions when it comes to the sale of advanced chips to China as well.
Min, thank you. Bloomberg China correspondent Min Lo. We have more ahead on the Asia trade. This is Bloomberg. Let's take another look at how stock markets are faring. That is the decline you're seeing under pressure Asia markets following the Wall Street rout, but S&P 500 futures pointing to a slight upside. Maybe there's hope yet. Let's get to how the Asian markets are setting up. The China Show co-anchor David Ingles joins us now. Dave, what are you watching?
Yeah, I'm glad you mentioned S&P futures. The fact that we are getting some upside there does suggest that things are somewhat ring-fenced. I mean, we will get some weakness, and we are seeing some weakness already coming through. In fact, when you look at the Aussie markets, but it doesn't seem we'll get the extent of the losses we saw on Wall Street overnight. I think just worth pointing out that I think for one, when you look at Aussie yen, which is a decent barometer, of course, of risk appetite, is seeing somewhat of a bounce as well. We did talk about you had to look at the Aussie markets. Within that, keep in mind, equities in Sydney had a fantastic day yesterday. So there is that temptation to take some money off the table. Case in point, when you had the financials yesterday, best two-day pop in Aussie financials going back to 2022. So we are getting a little bit of weakness there. Of course, when you look at some of the mining stocks on your screens, there's also the decline, of course, in gold prices reflected quite directly in those proxies. Apart from that, though, I think when you look at, I mentioned this earlier, right? We'll get losses not to the extent that we had overnight. When you look at Samsung, for example, trading right now, it's interesting because we talked about this week, right? That Asian markets relative to the U.S. have outperformed by the most, I think, so far this century is the statistic. So that correlation isn't as strong going into today. Plus, I had to look at the correlation between the weak yen and the equity markets in Japan. That correlation currently 40-day is actually flat. So the strength in the yen might not weigh on the Japanese equity markets as much as perhaps historically you'd think.
Yeah, to your point about Asia having this best start in a century versus the U.S., it's kind of Asia's time to shine, right? Given the correlation breaking down. What other market indicators might you be watching today?
Well, for one, let me go back to U.S. futures, right? Because that is a good gauge of direction as far as going into the European and U.S. session is concerned. Like, just to use a college analogy, if you will, right? It's your inebriated friend is starting to chug water. It'll take some time before they become okay, but they're kind of ring fencing the damage a few hours down the road. Vol is going to be interesting, right? So Kospi Vol, Nikkei Vol, both markets have done very, very well, but implied gauges of vol have been picking up alongside the price rally. So I think that's one to watch. Volumes overnight were quite substantial in the U.S., 34% heavier than usual. So that's one thing we'll be tracking, of course, to the extent of which we're going to get some selling coming through in a session today. And just away from the equity markets, fantastic this chart coming through as well out of our producer, Anthony Stephens, right? Watch iron ore for one. I was actually going to talk about this, the curve flattening over in Japan. Anyway, we'll see what happens there. I had to look at Japan bond futures. We are bid there, so we're obviously going to get a follow-through rally in APAC bonds on the back of the bid Treasury saw overnight. Back to you.
Yeah, it's interesting, Dave. I mean, yesterday we saw on the long end even buying that pickup on JGBs. Yeah. Thanks so much. The China Show co-anchor David Ingles. Now back to one of our top stories. The US and Taiwan finalizing a trade agreement to cut tariffs and boost market access for US products in Asia. Joining us now is Eswar Prasad. He is Senior Professor of Trade Policy at Cornell University. He's also the author of The Doom Loop, Why the World Economic Order is Spiraling into Disorder. Eswar, there are so many things that we have to pick up on here in this conversation, but let's start off first with this US-Taiwan trade pact. How significant are you reading this as perhaps a sign that, the tariff policy carries on and maybe the way in which Washington views Taipei as well?
Certainly, it is a positive sign that there is movement on the trade front, and Trump does seem to be interested in moving forward with deals with India, now Taiwan, and many others. But it's also important in terms of the positioning ahead of Trump's trip to Beijing, which could happen in April. And I think this is going to be an important point of contention between the U.S. and China, because I think Beijing certainly won't be terribly pleased about the U.S. and Taiwan, solidifying their relationship. But it still remains open to question how Trump sees his relationship, whether he sees it as purely transactional or whether, in fact, this means that he is going to align the U.S. more closely with Taiwan, not just in terms of trade, but in terms of broader strategic and geopolitical interests. That remains to be seen, and it's not entirely clear whether he's going to accede to Beijing's views about, staying out of Taiwan other than in the trade matter. But certainly it's a positive development.
You talk about how some things are not entirely clear. Do you think this ambiguity towards Taiwan is deliberate? What is Trump's approach likely to be, especially as you highlighted, ahead of that meeting between Trump and Xi that something is going to be in April?
With the Trump administration, it's always unclear. Before Trump took office, there was a very strong bipartisan feeling of hostility against China and, alliance towards Taiwan. That, I think, is much less clear, much more ambiguous right now, because Trump has shown repeatedly that even long-standing alliances don't necessarily mean very much to him. He sees things through a very transactional prism, even with close allies like Canada and Mexico, with which the U.S. has very strong trading relationships. He has talked in the past about how Taiwan has taken advantage of the U.S. Now, of course, Taiwan has taken steps to mollify the U.S., including by increasing investment within the U.S. So the question about how important Taiwan's chip industry is to the U.S., I think is going to be the crux of the matter. And of course, Taiwan, at some level, it's weakening its own hand by investing in the U.S. and making the U.S. a little less reliant on chip exports from Taiwan. But I think at the moment, we should still see this as a positive sign of the U.S. reinforcing its relationship with Taiwan and potentially, irritating Beijing to some extent.
Yeah, I think that is a concern. And as you highlight there is also a sense of Trump not being afraid to unpack some of these deals with the closest neighbors, the USMCA that's up for review July 1st. That's typically a fairly standard process, but we see how that could also be unpicked. What is your read into whether we are in a new world order and how China maybe sees this as a bit of an opportunity?
We are certainly in a new and more unstable world order, which is the theme of my book. And the notion of the doom loop is basically that economics, domestic politics, and geopolitics have all become intrinsically combined, and they're feeding off each other in a very negative way, hence the doom loop. And I think the relationship between the US and China and how they're positioning themselves is really important in this context. The US is receding from its position of global leadership. It's retracting from institutions like the IMF, the World Bank, the United Nations, that it played a very big role in setting up, that have underpinned global prosperity and stability. And China is trying to fill in the breach. I was in Davos recently, and Vice Premier He Lifeng gave this very clear speech that was meant to stand in opposition to Trump's speech. And China wants to play the role of the adult in the room as the defender of multilateralism, of globalization and free trade. The problem is that the rest of the world is not quite buying it. Yes, we've had Prime Minister Carney of Canada, Prime Minister Starmer of Great Britain going to Beijing, and they are working on trade deals. But I think the rest of the world is very concerned about Chinese exports basically flooding their markets. Last year, China had a $1.2 trillion goods trade surplus, and it's very difficult to see China as positioning itself for global leadership when it is depending on the rest of the world to pull its economy along because its growth has become so unbalanced. So unfortunately for the rest of the world, it's instability because on the two poles, we have two very unsavory alternatives.
Does it mean that even if China has the opportunity now, it might not capitalize on it necessarily? I mean, we are since hearing about how some top Chinese economists are advocating for loosening of capital controls and to seize the opportunity at a time where the US dollar is weak to perhaps advocate for the internationalization of the renminbi. How do you see that playing out?
This is a golden opportunity for China or any rival to the dollar because the U.S. has macroeconomic policies that are a real concern with the debt to GDP ratio, federal debt that is rising and showing no signs of coming under restraint. The independence of the Federal Reserve is under question, and many of the elements that underpin U.S. Institutional frameworks that have underpinned in turn the dollar's dominance in global finance, such as the rule of law, the checks and balances are being eroded. This is an opportunity for China, but the question is whether China is willing to do what is necessary to increase the prominence of the renminbi in global finance. The availability of renminbi offshore still remains very limited because of China's capital controls, which is what the economists that you alluded to are trying to get China to change. The exchange rate still remains, controlled to a significant extent. It's not market determined. And most importantly, the Chinese economy has become much more unbalanced, as I mentioned earlier. And there is no progress in terms of the institutional framework, the regulatory framework in terms of corporate transparency and corporate governance, and also elements like the rule of law that are really important for international investors to have confidence in a currency. So China's economy is doing well on the surface, but I think it's pretty clear to all concerned, including the Chinese leadership, that there are some fragilities underneath the surface. So unless China can tackle that and do what's necessary to increase the renminbi's prominence, this could be an opportunity that's lost.
Eswar, it's been really great to get your analysis. Thank you so much for taking the time to talk through these shifts in the global order with us. Eswar Prasad is Senior Professor of Trade Policy at Cornell University. And you can also explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more in one place. Check it out at bloomberg.com/videos. We're counting down to the market open in Tokyo and Seoul. Keep an eye on shares of SoftBank after the tech investors swung back to profit, helped by gains from OpenAI nearing $20 billion. Kioxia also in focus as it projects better than expected full-year operating income amid the global AI boom. Rakuten ADRs fell 3% as the e-commerce group reported lower than expected fourth quarter profit. And Nissan may move after narrowing its full-year loss forecast as a cost-cutting drive ramps up, which also reported earnings overnight. Now let's digest those SoftBank results with Bloomberg Intelligence analyst Kirk Boudry. So Kirk, what were your main takeaways? The focus almost seemed all on OpenAI investments.
I mean, in general with SoftBank, whether it's the earnings or not, people are more focused on OpenAI. It's the easiest way for investors that want exposure to play that. What we had in the earnings is the profitability was, they had net profits. It came in a little bit lighter than we expected, but I don't think that's a huge issue because they're still on track for their second best year of profitability ever. The other takeaway is how they're rebuilding the cash pile that they need to do further AI investments. So they sold between the fiscal third quarter and January, $6 billion of T-Mobile stock. They monetized another couple billion in Japan by borrowing against the SoftBank stake they hold. And they also increased their borrowings. So that's,
Kirk,
the other takeaway, I suppose. Go ahead. Sorry.
Go ahead, Kirk. Okay.
I wanted to add that one thing outside of the earnings that's very important is that the fintech segment, PayPay, filed for its IPO in the US overnight. And this extends some of the same themes that we were looking for in the quarter. And one of them is investment gains driving profitability, which in fourth quarter, should the IPO happen in March, that is incremental to that. And the second thing is raising cash, because SoftBank is probably going to be the selling shareholder, which will raise more money. This will go through Vision Fund 2, to go out and do more AI investments.
So, Kirk, just very quickly, if you can, what do all these investments and plans mean for the outlook for SoftBank Group?
Well, I mean, in the near term, the stock is probably going to be a little bit soft. I mean, the ADR is traded off. I think less because of the profitability numbers, but more because SoftBank didn't have a more sort of direct answer on whether they're going to invest more in OpenAI this quarter.
Kirk, we'll leave it there for now and see how SoftBank opens in the next hour. Great to have you, Kirk Boudry from Bloomberg Intelligence. Now, shifting gears, talking South Korea now. Equity futures are pointing a bit softer after the benchmark closed on Thursday at an all-time high. And the rally is being led by chip heavyweights, including Samsung, which has been attracting its biggest wave ever of foreign buying. Let's bring in Bloomberg Asia Equities reporter Sang-mi Cha. So, Sang-mi, there seems to be enough appetite for these chip-related stocks. How is that going to drive the gains in the Kospi?
Yeah, so we're seeing record investor deposit. These are cash that's sidelined to be invested in stocks. And they have been on the rise, but it's hit $77 billion. So this means that the ants, the retail investors of Korea, their nickname for that, because they move in unison, are now readying to deploy this cash into the local stocks. And for several years, we have seen these ants actually pile into the U.S. stocks. They were always buying Tesla, the plants here, and they really like the U.S. stocks because of the single stock leverage ETFs and so on. But what's changing now is the government is rolling out these incentives so that they can repatriate those funds back home. And some of those initiatives that they have is this reshoring investment account, which through which they have made money in overseas stocks. And if they reinvest that, the proceeds in the local stocks for at least for a year, then their tax are actually exempted. So all of these things are boosting the shares, and we're seeing Kospi up 31% this year alone.
Talk to us a bit more about the potential for gains, because it's a $77 billion cash pile, as we understand it, that these South Korean investors are sitting on that they can then pile into the stock market.
Exactly. So we're seeing those investor deposits, but also margin debt climbing and over 30 trillion won figure, which is quite significant. This has been the core focus of President Lee Jae-myung to really shift those crowded money in property and in elsewhere in safer assets into the stock market, and hence why we have seen Kospi rising. Yesterday, the Kospi index has risen to 5,500 levels, and assuming that we have started off from 2,600 level just a year ago, it is a massive increase here. And looking at the chart just now, as the S&P 500 is basically flattish this year. So this is why the local investors are also changing their minds and buying some of these ETFs, especially those that's following the AI beneficiaries, Samsung Electronics and SK Hynix and Hyundai Motors, exactly for their robotics business. And so we are seeing these moves, but also the government is coming up with different initiatives. Again, for instance, allowing single stock ETFs in the near future as well.
Sang-mi, great to get this context from you. Thank you, Bloomberg Asia Equities reporter Sang-mi Cha. We have more ahead on the Asia trade. This is Bloomberg. As we count down to the Open in Japan, it's worth noting that that Takaichi tailwind seems to have petered off a little based on the performance of Japanese stocks just a day ago. On top of that, options contracts are signaling that Takaichi's bold spending plans could inject a bout of volatility into markets. And this comes after her landslide election win last week triggered a strong stocks rally. Let's get to Tokyo and bring in senior stocks reporter Hideyuki Sano. Hideyuki, what is the options market telling us about Japanese equities?
Hi. So we've seen some unusual developments in the stock market over the past week. The implied volatility of the Nikkei average remains at a very high level, even after the election on Sunday. Now, normally, this implied volatility tends to rise ahead of a major market moving event, and they tend to fall after those events get out of the way. But Japan's Nikkei's volatility index remains at around 34, and that was almost double the level of the US counterpart, which is volatility VIX or volatility index. Yesterday. And this is quite unusual, and the gap between the Japanese volatility index and the US index is almost near the, it's not the record high, but almost at the near the record high. It's very unusual. And another thing that investors should probably note is that the call option volatilities are rising, but at the same time, put option volatility remain at a very high level. Now, this is very strange because if you look at the gain in the Nikkei, you can see how bullish the market sentiment has become. But the option market is signaling that some investors are clearly worried that there might be some downside.
Hide, we'll have to leave it there for now, but it's been interesting how tame the Japanese JGB markets, I should say, has been in the past couple of sessions, or at least maybe investors are still digesting some of the fiscal plans that have come out from Takaichi-san. Hideyuki Sano there, our Bloomberg senior stocks reporter. Now let's take a look at how futures are shaping up. So those declines expected potentially for South Korea, maybe a bit of that tapering off of risk appetite in Japan as well, pointing to declines. These Nikkei futures, we will be weighing out as well the earnings releases after SoftBank numbers and that OpenAI investment. For the moment, the Australia gauge is declining about 1%. Similar picture in terms of digesting some of these earnings news and announcement. But of course, it's been about the risk off on Wall Street overnight, those concerns about disruption from AI tools, although we are seeing a bit of a pickup in US stock futures. We'll track the markets open. This is Bloomberg.
This is the Asia Trade. I'm Shery in Seoul. We're counting down to Asia's major market opens as we continue to see some of that AI disruption fear disrupting really the markets. Broadly, we're talking about logistics stocks selling off in the Wall Street session, Avril, and of course, this coming back on the back of really that sell-off we saw in software makers, real estate companies, brokerages, insurers, and so many more sectors.
Yeah, sector by sector taking a hit. And against this backdrop, we're of course also weighing out some of these earnings scorecards from the likes of SoftBank as well, which is plowing investments into OpenAI. We'll digest what this means for the firm. Shery.
Really, we're seeing this divergence between the winners and losers when it comes to this new AI age, right? I mean, you mentioned SoftBank, and we had seen their fourth straight quarterly profit, and those investment gains from OpenAI nearing $20 billion. You can see at the open, the Nikkei is still under a little bit of pressure as we're seeing the Japanese yen much stronger against the US dollar than in previous days, especially with the consolidation after the elections. We are seeing it at around the 152 level against the US dollar. A little bit of pressure today, but this is a post-election rally. We're also reacting to more earnings, not only from SoftBank, but the likes of Kioxia that had rosier than expected forecasts. Also, Rakuten, for example, operating income missed estimates. Nissan also expecting to report another loss. We're watching the JGB space very closely as well, as we have seen a little bit of a bump there on perhaps relief about the fiscal concerns that we've seen in Japan, especially after the sweeping victory of Prime Minister Takaichi that could lead to a little bit more stability. A whole different picture perhaps here in South Korea, where bonds are really struggling to gain some traction, and that's on concerns about the fiscal health of this economy, especially with the need perhaps for more expansion, given, of course, the state of the broader economy. We, of course, are expecting an imminent inclusion in the global index that could give a little bit more support to Korean bonds, but take a look at the Kospi right now. Not doing much as we're seeing that downside pressure on the tech-heavy Kosdaq right now. The Korean won led the gains in the previous session against the US dollar, but we're seeing a little bit of weakness towards that 1440 level.
Yeah, Shery, as we talked about this sector by sector getting hit from the fears about AI disruption, it's interesting to see how futures are pointing to perhaps a bit of a bounce. There is the sense that this risk off was a bit overblown. We, after all, don't yet know the full extent of the impact of some of these AI tools, but it looked like in the overnight session, investors were selling first, asking questions later. We are seeing also that overnight move in treasuries, the rally there. And this was prompted by maybe some of the jobs data that came in, jobless claims higher than expected. We are also maybe seeing a bit of investor skepticism to the jobs report. How strong is the labor market in the U.S. really, as the focus also shifts to the inflation data that is coming out later today. Take a look at how U.S. crude futures are faring, also moving sideways. There is a lot to unpack. Joining us now is Julia Wang. She is North Asia CIO at Nomura International Wealth Management. Julia, great to see you. So we did see U.S. markets really hard hit overnight. Maybe a semblance of calm is returning now. What do you make of this and the extent in which this could inform the moves for Asia at a time where we have been seeing the correlation between Asia and U.S. stock markets perhaps a bit different from what it used to be?
Yeah, sure. Good morning. Thanks for having me. So yeah, of course, I think just picking up on the AI, we definitely think that there is a contradiction, when it comes to what investors are worried about when it comes to AI. On the one hand, there's a fear that AI is not monetizing quite quickly enough. On the other hand, there is massive evidence that investors are worried about sectors that are disrupted too quickly for comfort. So those two things can't both be true at the same time. So I think that just goes to show that there is a lot of sense that we're in uncharted territory when it comes to how this technology will develop. And investors are, to borrow one of your phrase earlier, they shoot first and ask questions later. That, I think, means a lot of volatility probably is still on the way for us. It also means that for longer-term investors, it's time to really go to the fundamentals of companies, because a lot of opportunities could actually start to emerge when the market sell off in a panic like this. So when it comes to Asia, I think that Asia actually does not really necessarily share the same type of issue that maybe U.S. investors, when it comes to AI, are fearing at the moment. Valuation is not too high. Indices are not overly concentrated broadly for Asia. There's a lot of other sectors to play for. It's the spending is not excessive. In fact, I think spending could probably still ramp up in the coming years. So I think that, and we're also in a different part of the supply chain when it comes to AI, not so exposed to sectors that are sitting on, to some extent, very high profit margin post-COVID. So I do think that, AI is in a much different, Asia is in a much more different place when it comes to some of these fears in AI. And actually, from that angle, could be an even better diversification play for investors who want to invest in this long-term theme.
Perhaps also the fears about disruption are different because the concerns that are plaguing some of these tech companies are different. The likes of Baidu, Alibaba, for example, in Chinese tech. Not necessarily cannibalization being a problem there, but the fact that monetization is still an issue. Could that be a risk?
Well, I think that China is to some degree of at an earlier stage when it comes to the AI capex ramp up, because they have constraints, right? So they have constraint on chips, they have constraint on talent. So I think their pace of development is slower. That also means that the ramp up is still way ahead of us. We have, I think, a couple of years where AI ramp up will steadily increase for the big tech companies in China. And they're so laser focused on monetization. You're right. They can't afford to really throw money at the problem. They have to really make sure every step on the way is generating an ROE for investors. That's actually a good thing. It means that it's a steady long-term play on AI. And also, I think when it comes to China tech, don't forget that the opportunity for China tech is really in the automation, industrial, robotic space. It's whole industry, whole economy approach, rather than just focus on end consumers or advertising. So I think that it's a much broader, maybe slower moving path because the whole manufacturing sector has to move with it. But I think that it has the possibility of creating more longer lasting lift for productivity. So I think that, at the moment, these companies are maybe selling off, getting encompassed this broad fear about AI, but really their business model are quite different. They're much more early stage. Their earning hasn't really started to show up, these AI benefits. So we think that actually for long-term investors, these companies are pretty interesting.
How exactly are you positioning then for these Chinese tech names at a time where we are seeing a sort of bifurcation between the US and China in terms of AI models as well, right? Today we're hearing about how OpenAI is accusing DeepSeek of distilling some of these US models.
Yeah, so I think, it's the way we approach them is that we look at what the market are worried about. The market is worried about some of the near-term headwind when it comes to the spillover from a very slow economic recovery, maybe some political policy changes. They're worried about geopolitics, chips. They're also worried about this spillover from AI, from the U.S. trade. So all of these are negative headwinds for China tech in the short term. And that's why the index has done pretty badly since the beginning of the year. It's really lagged some of the other peers in Asia. But I think that the longer term, medium to longer term fundamentals are actually pretty good. The index these companies have sold off to even more attractive values. And as long as you think that AI is the longer term growth trajectory, we think that there's no question that China has to go all in on AI. And there's no question that these companies sit at the critical point between this technology and the end users, be it businesses or consumers. They control the distribution channel. All of the large language model value creation eventually will have to accrue to these platform companies. The competition landscape is entirely different from the US. So we think they stand to benefit significantly from AI, and that's yet to come.
Julia, we've alluded slightly to the geopolitical risks around tech, and we, of course, continue to watch the latest headlines around trade, whether it's President Trump threatening all of these tariffs on the likes of South Korea, Canada, Europe. Right now, we're hearing that when it comes to conversations with Japan, the chief trade negotiator, Akazawa, speaking in Washington about this $550 billion fund that, of course, they have committed into the U.S. They're talking about those first projects. The conversation with the Commerce Secretary Lutnick stood at more than 80 minutes or so. Japan has a new mandate with the prime minister's sweeping election victory. The yen seems pretty stable. How big are these geopolitical concerns for the country and the broader markets at a time when we have seen an incredible rally in the Japanese stock market, given the improvements over governance and so forth?
I think the Japan fundamental case has gotten way stronger since the election because political stability was one big issue for overseas investors the last 12 months, and that just got solved. So Takaichi, Prime Minister, has a mandate for growth, and that's very clear from her election victory. So we think she will go for growth. She will go for growth, and she has many tools to manage all the other spillovers or risks the market will worry about, be it FX or JGB yield. You know, when you have a political stability, when you have a strong leadership, you can manage these risks because now you have credibility from the election. So we think she has a clear mandate now to go for fiscal policy, to go for industrialization, to go for some of the things I really want to spend on to increase Japan's productivity growth for the future. So she can go for that. And we don't think that necessarily trade risk per se is so much of a problem, but I do think that the currency volatility always plays into the Japan market. And the dollar yen has decoupled somewhat from Nikkei last few days. So that's something we're watching, maybe as a short-term risk to markets.
Julia, I suppose Japan isn't the only country that is going pro-growth and spurring things along with some fiscal policy. What is the risk of spurring inflation, and do we have to this year perhaps reassess our assumptions of rate cuts?
I think that's a very good question. To some degree, it's already started to happen, right? Because you see RBA has hiked rates. You see that the U.S. is clearly at the tail end of its easing cycle. That's the consensus. More economies are, central bankers are saying they're now in a comfortable place. They don't have to do anything. They can just watch. So clearly, I think that's already come into play. And that's because the policy reaction function is different for different central banks. Some of them are just watching for inflation, so they are more hawkish, right? Like the RBA, like maybe the RNZ as well, RBNZ as well. Some of them have a mandate for the labor market. In the case of the U.S., job growth is, if after revision is close to zero the last couple of quarters, which means that it's an expansion without job growth. And if you're the Fed and your mandate is inflation and job growth has downside risk and something you have to watch and take into consideration. So I don't think it necessarily means that rates are going to go higher across the board. I think divergence is the way we would play it. And that means that, for economies where they are economies where cyclical factors are good and policy rates are being hiked. Actually, that means that from an FX and rates angle is actually a diversification play for many investors. So Australia, for example, is a very good diversification play because of the policy rate divergence versus the U.S.
Julia Wang, good to have you with us. North Asia CIO at Nomura International Wealth Management. And we're watching some of those big movers in the Asian session, especially after earnings. Take a look at SoftBank, a downside of almost 4%. We had seen their ADRs also falling overnight after their third quarter income missed estimates, but they're still headed for that fourth straight quarterly profit. This is a first for SoftBank since 2021. Their investment gains from OpenAI near $20 billion. But of course, we do have jitters around today around the disruptions of artificial intelligence and perhaps all of the capex in that space. You can see Kioxia right there, unchanged, but they've now forecast better than expected full year operating income. Of course, NAND flash memory prices are high. There's a strong demand for the data storage facilities and business, so all of that helping. Rakuten down almost 7%. Their operating income missed estimates, but they're still on track to return to operating income levels last seen back in 2017 before they announced their mobile market entry. So we'll continue to watch that business. Take a look at Nissan as well, because they expect to report a $392 million operating loss for the fiscal year, but they're still narrowing a full year loss forecast. We have seen cost-cutting measures ramping up. They do face challenges, but they're really working on that turnaround. You can see the stock gaining ground. This is Bloomberg.
February 24th, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
We're taking you to live pictures now out of Washington, where the Taiwanese Vice Premier Cheng Li-chun is holding a briefing, and this is following on from Washington and Taipei having finalized a trade deal to cut tariffs to boost market access for U.S. products in Asia as well. And we know how they are talking about channeling billions of dollars into U.S. energy and tech projects as well. Of course, we have been seeing Taiwan chips really front and center when it comes to these concerns from Washington. And uncertainty still remains over Taipei's promises to invest hundreds of billions in U.S. chip making at a time where we're hearing how the Japanese chief trade negotiator Akazawa is talking about a gap when it comes to investments into the U.S. Let's unpack this. Bring in Bloomberg Washington Deputy Bureau Chief Laura Davison. Laura, this trade pact between the U.S. and Taiwan is seen as a sort of step in the right direction, but what are the risks here that there's no durability or longevity from these trade pacts, especially given perhaps Washington's perceived slowness when it comes to these investments into the U.S.?
Yeah, so this deal has a lot of details when it comes to the purchasing of energy goods or agricultural products, but there aren't a lot of specifics here about the chip pledges that were discussed last month when this deal was initially announced. Those aren't really enumerated here in the paper that was signed today. This is, suggests that there could be a risk, and that the understanding of two sides, both the Taiwanese government and the U.S. government, aren't exactly on the same page here. And we've seen President Donald Trump get particularly perturbed when some of these things, aren't moving to his understanding, even if that isn't necessarily the broader global understanding of how these deals work. We saw just a couple weeks ago with the South Korea trade deal that was cut, not too long ago, that Trump felt like that the implementation and the investments weren't coming quick enough, and he threatened to increase tariffs on South Korea. We also saw also this week with the USMCA, the North American Trade Pact, that Trump actually cut himself in his first term. Now that there's a deadline for renegotiation, he says he might want to pull out of those pact altogether. So there's risks both in the short term and in the long term that these deals may not be durable.
Laura, how important is Taiwan for the United States, both on the geopolitical sense, but also, of course, as a key provider of semiconductors?
Taiwan is incredibly important. Taiwan has about 90% of the world's chip supply, and it powers everything from smartphones to airplanes, and the U.S. is incredibly reliant on Taiwan. Taiwan is also reliant on the U.S., particularly for military backing and military equipment. So it's really a symbiotic relationship, though. That there's concerns, particularly from the Taiwanese side, that if a lot of this chip manufacturing shifts over to the U.S., that the U.S. won't have quite the same investment in Taiwan from a geopolitical angle, and that could leave them very vulnerable to perhaps an invasion from China.
Let's talk a little bit about China as well, and the broad meaning of and significance of this relationship, because we have seen, of course, those changes that you alluded to past trade deals. How is the Trump administration right now positioning across Asia, especially given the ongoing disputes with South Korea, for example, on how fast a trade deal is being implemented? Even here from Japan, we heard from the chief trade negotiator that there's a gap when it comes to what they're thinking about investments into the U.S.
Yeah, all of these Asian trade deals have been very much on a bilateral basis. So depending on who's kind of has optimism and who has pessimism can vary really any given day. We saw yesterday that the Vietnamese leader is headed to the U.S. hoping to meet with Trump, but has not secured a meeting yet. That suggests that there's perhaps a little bit of pessimism about that deal. Howard Lutnick is currently meeting with a Japanese delegation right now in Washington, discussing this $550 billion investment fund. Bloomberg did report that there are several deals that are getting close, one involving SoftBank and AI and data centers, another involving oil drilling, and a third involving synthetic diamonds for semiconductor chips. So there's progress there, but as we've heard from the Japanese side, is that there's a gap here, and perhaps these deals may not be announced and get implemented just as soon as the U.S. is hoping they might.
Laura Davison, good to have you back. Bloomberg Washington Deputy Bureau Chief, watching all of the latest trade developments, this one between the U.S. and Taiwan. OpenAI has warned U.S. lawmakers that its Chinese rival DeepSeek is unfairly extracting results from leading U.S. AI models to train the next generation of its chatbot. Let's bring in our China correspondent, Min Lo. Min, what is OpenAI saying?
Yeah, this is a serious accusation from OpenAI. It's saying that DeepSeek is using a method called distillation technique to train its model. So what this is you use a larger, more established large language model to train a new model, and there are legitimate use cases for distillation, right? OpenAI offers such service to software developers who pay a license for it to help to integrate OpenAI models into their own applications. But what OpenAI is opposed to is to use distillation to train models that mimics its own capabilities. So that's what its accusation is. And it's written a memo to the House Select Committee on China accusing DeepSeek of that, and also saying that DeepSeek presents a national security threat, not just because of its censorship and its pro-Chinese Communist Party bias, but also because it doesn't charge high fees the way OpenAI and other US AI models do, and that could really sort of erode the US leadership when it comes to AI.
Min, what about the implications potentially for US-China relations and specifically for DeepSeek as well?
So it really depends on what U.S. lawmakers do in response to this memo from DeepSeek. And already we had seen some U.S. Republican lawmakers, for example, saying that this is a classic Chinese Communist Party playbook to copy, steal, copy, and kill. And it depends on how much momentum there is behind this to enact some form of action to retaliate against DeepSeek, whether it's placing sanctions on it, putting it on a blacklist, or perhaps even rolling back the latest loosening of restrictions from President Trump to export the H200 chips to China. So, of course, if that happens, it will probably also derail the trade truce that U.S. and China currently has. So we'll see what happens, because China will probably also have a response if the U.S. takes some measures against DeepSeek as well.
Bloomberg's China correspondent Min Lo there as we continue to watch the tech sector. One of those suppliers of key chips, Kioxia, rallying in the Japanese session today, is soaring more than 10%. Its forecast better than expected full-year operating income. We are seeing this surge in NAND flash memory prices, and of course that strong demand for data storage. So revenue should be topping 2 trillion yen for the first time. We have seen in the overnight session already SanDisk, Micron up in sympathy. Kioxia shares have risen more than tenfold from a year ago. And you can see the memory rally on that terminal on the right side right there, showing also gains for Korean chip makers as well. We have more ahead. This is Bloomberg. Broad downside across Asian equities today, and it's really that tech sell-off continuing into the Asian session. The Kospi is steady, but the tech-heavy Kosdaq right now is under pressure. Every sector in the Nikkei is in the red at the moment, except for utilities. And you can see even the ASX 200 losing more than 1%, given, of course, the plunge in gold prices, not to mention that oil is also headed for weekly loss, Avril.
Yeah, and we are watching the likes of Inpex as well. This is, of course, a company that has been performing fairly well. As we look at these U.S. crude futures, they are more or less moving sideways. Perhaps the geopolitical or the risk premium there is hard for investors to continue deciphering. The focus, of course, has been about supply glut, although some market participants think that is wrong to describe it in that manner. Take a look at how gold is faring along with silver. Overnight, we did see silver harder hit than gold. For the moment, you are seeing a bit of a rebound in both precious metals. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how Japanese assets are trading at the moment. We're seeing broad downside, including with SoftBank, which is under pressure today after their third quarter net income missed estimates. Still, we're looking at a fourth straight quarterly profit, a first for SoftBank since 2021. And of course, it's all really to do with those investments around artificial intelligence, gains from OpenAI nearing $20 billion. Let's discuss with Atul Goyal, Managing Director and Senior Analyst at Jefferies. Atul, always great to have you with us. So what were your key takeaways from this earnings season for SoftBank?
Thanks, Shery. Key takeaways were largely around their investments increasingly focused on OpenAI, and their entire valuation also depends on OpenAI. Now, as a visionary, what Masa is doing is bringing up a platform which is about the OpenAI multimodal platform, as well as robotics, his investments in Ampere and other chip manufacturing businesses. But as an investor, the risk is essentially, for us, centers around OpenAI. It is one of the main players in that market. It is not the only player. So at this point in time, it seems the investment is largely dependent on OpenAI, not exactly AI per se, if you know what I mean.
What does that mean in terms of it being a perhaps risky and concentrated bet?
That there are multiple players in the market, including Google's Gemini, Anthropic Claude, xAI, Meta, and OpenAI. So if one of these wins, and Claude is already ahead in terms of enterprise market share against OpenAI, and if Gemini continues to increase its share on the consumer side, it becomes very challenging for OpenAI to grow its share in that business. And without growth, the valuations uplift that we have seen may not come through. So far in the last 12 months, there were 3 rounds, all involving one company. That was SoftBank. Prior to SoftBank, the last valuation rounds were below $100 billion. The SoftBank valuation round came at 150, then 260, then 500. And even for 830, which has seen no confirmation from anyone else yet, there were news reports that SoftBank is, the investor interested to invest $30 billion at $830 billion. So within a year, its valuation has been increased, largely driven by SoftBank's investments. Meanwhile, competition is intensifying in that market against OpenAI. So SoftBank's dependence on OpenAI is the risk here.
Atul, talk to us about these investment risks, because there are still these lingering concerns about circular deals, circular financing. And for the likes of Masayoshi-san, he knows better than most the pain of bubbles bursting. How much of a risk then do these deals present for SoftBank?
It's this kind of circular financing concerns have been raised not just for SoftBank, but they have been raised for Nvidia and other providers, including AMD, etc., as well. In case of specifically for SoftBank, the issue is they are the ones who are invested in this OpenAI entity, and they are the ones who are increasing the valuation. So obviously that's also to a certain extent circular, because buying a stake at a higher valuation in OpenAI increases SoftBank's own NAV as well. Then on the other hand, with ARM, apparently SoftBank is also a customer of ARM, and it's one of the companies that is giving them higher prices on the licensing side, allowing for higher profits to be visible on ARM side. So there are these circular notations in different places for different companies in this space. To a certain extent, vendor financing has happened for a very long time in enterprise markets, but also in like auto markets. If you notice, the auto companies themselves finance the consumers. So vendor financing is not new, but what we are seeing in other parts, which is investments being turned into or sale deals being converted into investment, this is relatively new. A new risk as well, but a whole lot of other companies are doing the same thing at this point in time, especially around OpenAI.
what are you seeing in terms, I mean, we've been talking about SoftBank and its OpenAI investment for the better part of, I think, 5 minutes. But talk to us about what you're seeing in some of the other developments that we learned overnight in terms of PayPay and, you know, the listing that's coming up as well. And what does this tell us about the strategy SoftBank is undertaking?
So other parts of SoftBank's businesses are doing fairly well. Their investments in LATAM are doing well. PayPay in particular is a near monopoly in Japan, but its majority owner is SoftBank Corp, the telecom business. It's doing very, very well. In fact, their earnings are multiplying each year. They're in a very good position. So there are parts of SoftBank universe that are doing well. SoftBank Corp itself is held up. It's more of a dividend play telecom company. Then you have ARM, which is doing well, but it's a very expensive stock, and it also drives about 35% of their NAV. At this point in time, it's a bigger driver of NAV than OpenAI, but it's not a big driver for the stock price. So ARM is another part. And then there are other investments which are part of Vision Fund 1 and 2. But you mentioned PayPay. PayPay in particular is very impressive.
So even PayPay is all a way to try to monetize some of their assets in order to invest more into AI, right? How does SoftBank's balance sheet look right now? I mean, we've talked about, what, $50 billion or so of investment just in 2025. How healthy is the picture?
So it is in a way that the CFO has defined the limits for how much will they borrow against their NAV. Or their equity assets. Is about 25% is the limit they have drawn. However, when we hear news about SoftBank wanting to invest another $30 billion into OpenAI, that makes it very risky because almost 80% of their ARM holding is already pledged for margin loan. This is based on the September results. Based on December results, we'll find out exactly how much more they have pledged of the remaining ARM stock, but they are reaching limits of where they can easily borrow. So they might have to look at other sources of funding, including debt and equity financing in future, if they continue to invest at this pace, because it's not just OpenAI. They've acquired Ampere at $6.5 billion. They've acquired ABB Robotics at $5.8 billion. There's another Digital Bridge they have acquired at about $3.5 billion. So there's a lot of investment that's going out. And at this point in time, the returns are not very clear and visible.
Yeah, we are waiting to see the payoffs of all these investments. Atul, it's been really good to get your analysis. Thank you for taking the time. Atul Goyal is Managing Director and Senior Analyst at Jefferies. Now let's talk Samsung now, because it has been claiming this early lead in the race to supply advanced high bandwidth memory for chips for AI accelerators, such as the ones made by Nvidia. The Korean giant has sent its first commercial shipments of the chip to customers, a milestone as it competes with rival SK Hynix. For more, let's bring in our Global Tech Executive Editor, Peter Alstrom, in Hong Kong for us. Peter, so we are seeing Samsung increasingly managing to shake off the impression that it had been trailing behind SK Hynix when it comes to high bandwidth memory. Suddenly we've seen the stock recovering. How big a progress is it making on this front?
Yeah, this is one of the more competitive parts of the memory chip market right now. Of course, we've seen this crunch in memory chips where prices are going up quite a bit. SK Hynix has been a primary beneficiary because they're supplying a lot of these AI hyperscalers, including OpenAI, of course, which we were talking about earlier. Its chips are used to pair with Nvidia AI accelerators to train models. They put these into the data centers to be able to train the models. So Samsung has been a couple of steps behind, which is an unusual place for Samsung. Usually it's led the memory chip market. Now it's been behind SK Hynix, especially in HBM. We've seen SK Hynix get ahead in terms of each generation of HBMs. But now Samsung came out and it said that it's reaching scale with the latest iteration of the HBM chips. Investors have taken that as a positive sign that it's going to be able to supply Nvidia and gain back some of that ground that it's lost to SK Hynix.
Peter, when you look at the chipmaker landscape right now, how feasible is that, given, of course, the lead that other players already had? And does really achieving those stable yields for Samsung finally mean that they can level the field?
Well, this is a competition that happens again and again. They have made some progress here with HBM3, HBM4. They are making some progress against SK Hynix in particular, but Nvidia is expanding very, very quickly. We just got these crazy CapEx numbers from Alphabet and Amazon, where they're going to spend more money on data centers than any companies have ever spent in history. So they want to move very, very quickly. The bottlenecks are around being able to get all the stuff that they need to actually build out these data centers. So Nvidia wants supplies from Hynix. They would love to be able to get supplies from Samsung also in the same kind of volume. So they're trying to tap into Samsung. It is kind of making some of this progress, but they have a longer ways to go. Micron is in this race too. So you have those three who are competing quite aggressively for this HBM slice of the market that's really supplying the data centers. And then what we're seeing in the rest of the memory chip market is that prices are really spiking because there's a limited capacity. And if more chips are going into the data centers for the AI push, then you have fewer chips for all the other applications. So prices are going up. We just heard Cisco talk about this, and that's part of the reason that their shares have gone down so much recently.
Peter Elstrom, good to have you with us, Global Tech Executive Editor there. And take a look at some South Korean assets, because we're really watching the Korean bond space. We have seen them really struggle to gain traction, despite the fact that they could very soon be included in a global index. They've been pressured by potential fiscal expansion, also the central bank's reluctance to cut rates. And we're now hearing from the South Korean finance minister and also the Bank of Korea Governor Lee Chang-yong that they're holding the market review meeting, and the government is assessing bond yields that they have edged higher. The South Korea will strengthen the monitoring of bond markets as well. Analysts, though, still seeing the yields on the 10-year for South Korean bonds at around 3.5% by the end of the second quarter. But we'll continue to watch the bond space in Korea in particular, given those fiscal concerns. You can also explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more in just one place. Check it out at bloomberg.com/videos. We have more ahead on the Asia trade. This is Bloomberg. Blackstone co-founder Steve Schwarzman is the focus of a media blitz in Japan, including a TV commercial where he touts the credentials of the world's biggest alternative asset manager. It's all part of a push by private equity firms to access the nation's $7 trillion in cash parked in households. For more, let's bring in Asia Investing reporter Lisa Du. And Lisa, we can even feel the opportunity at Bloomberg News, right? I mean, we have seen so many of these very high-profile bankers coming through Bloomberg, just trying to talk about the opportunity in Japan. What are they seeing?
Yes, definitely. Steve Schwarzman, Blackstone, their rivals like KKR, EQT have all said that they see Japan as the biggest private wealth opportunity outside of the U.S. And the numbers really speak for themselves. You know, Japan has the world's fourth largest cohort of millionaires, and UBS actually forecasts that among the top four, Japan's numbers are forecasted to grow the fastest in the coming years. And obviously, there's also that $7 trillion cash pile that the Japanese population is sitting on. People, often point to it. The government, brokerages, all these private investment firms are doing all they can to get them to move that into the financial markets and invest that. And that's coming at a very opportune time because, Japan is now, experiencing sustained inflation, and a lot of these kind of wealthy retail investors are realizing they can no longer keep their money in cash and are considering many options to moving that into the markets, into the investments. And obviously, companies like Blackstone, KKR are trying to capture a bit of that.
What does doing all they can to capture that actually involve, and why?
Yeah, so you see there's been a huge media blitz that Blackstone is doing. They've done newspaper ads. They've released like a translated version of Steve Schwarzman's biography in Japan. These private equity firms actually need to work with local brokerages like Daiwa and Nomura to access their distribution network to be able to create products and that are connected to their private equity, private credit infrastructure strategies, and then sell that to retail investors. We've also heard about some of these private equity firms traveling to all the reaches of Japan to kind of these smaller brokerage branches to teach their financial advisors about their products so that they can better advise their clients. But really, it's kind of it's a big opportunity that they're really trying to seize on.
And yet, Lisa, we know that traditional finance banks have a very strong foothold in Japan. So what are some of the challenges?
Yes, it's definitely still early days for them, and so there are many challenges they're facing. Funnily enough, one of the biggest competition for private market products is actually the equity markets. You've seen the Nikkei has been on a tear over the last few years. It's up 15% this year. It's very easy for retail investors to just get into the equity markets with much lower fees and higher liquidity. Additionally, there has been many people have spoken up about the potential risks with kind of retail money going into the private market space, as this historically has been a space that only institutional money who are more sophisticated investors and long-term investors could touch. And so I think some regulators are definitely also keeping an eye on this space. And then thirdly, I think, funnily enough, is name recognition in Japan. We spoke to many investors, retail investors, some with net worth of over $1 million who had never heard of names like Blackstone or KKR. And what they really need to do is they need to get their name out there and so that people in the Japanese public recognize them and would feel safe investing with them. So it's definitely still early days, but lots to watch in this space.
Yeah, seismic shift underway in Japan. Lisa, good stuff. Thank you so much. Our Asia investing reporter, Lisa Du. Now, of course, there's money to be made in AI as well, and a new generation of Chinese entrepreneurs is challenging U.S. dominance in AI and rapidly building huge fortunes driven by Beijing's quest for technological independence. For more on today's Bloomberg Big Take, our wealth reporter Diana Lee joins us from Hong Kong. So, Diana, give us an overview about how AI is minting these new tycoons.
Yeah, sure. So this is probably going to be your most comprehensive list of all the Chinese individuals that are winning from this AI race. And they really represent a new generation of the tech elites in China that are quite different from the previous generation of the consumer tech tycoons who built their wealth about a decade ago. So this cohort really built their wealth by aligning their business goals with the Chinese government's goal of technological self-sufficiency, especially at a time when the U.S. is imposing a lot of restrictions on, AI chips and AI software. These Chinese founders really find a way to fill that void domestically, and essentially they're helping China to challenge the U.S. dominance in AI. And to us, the message is that in today's China, the wealth creation is increasingly intertwined with the Chinese government's goal of technological independence.
So who are these people? Tell us a little bit about what this new cohort of tycoons looks like.
Yeah, so if you look at the demographics, a lot of them come from the elite academic backgrounds or engineering backgrounds, especially along the silicon supply chain. A lot of them actually come from elite engineering schools like Tsinghua University or Chinese Academy of Science. We have one of the richest people on our list, Chen Tianshi. He is the founder of a Chinese AI chip maker, Cambricon. So he actually entered college at the age of 16. He was admitted as part of this genius youth class of the Chinese Academy of Science. He worked for the State Academy for a couple years before starting his own AI chip startup. So these people's talents are discovered pretty early by the state. And when you look at their professional experience, there's an increasing number of the locally educated talents in China. For example, you look at founders for DeepSeek and Unitree. These founders have never really worked or studied outside of mainland China. On the other hand, yeah.
Diana, go ahead.
Oh, yeah. And on the other hand,
what else are we learning about these tycoons?
Yeah, so on the other hand, you're seeing an increasing number of the people who used to work or study in the U.S. decide to come back to China and set up their own company, bringing that same knowledge that they learned in the U.S. For example, we've seen 2 AI chip company makers. They actually used to work for Nvidia and AMD respectively, and they decided to come back to China, set up their own semiconductor companies, took them public in Hong Kong, and that's how they become billionaires. So you see that this trend is probably going to accelerate, especially with the Trump administration. There's some visa hurdles that's making it difficult for Chinese students to work or study in the U.S. in the future. So we will probably see more of them come back to China and joining this increasing number of locally educated AI talent here.
Yeah, Natalie, Bloomberg Wealth reporter, do check out that story. It's really interesting about this new generation of Chinese billionaires. Some of the other corporate stories that we're tracking right now, Anthropic has completed a $30 billion funding deal from investors, including Singapore Sovereign Wealth Fund, GIC, and Coatue Management. The deal values the AI company at $380 billion, making it one of the world's most valuable private firms. Anthropic also confirmed plans to let employees sell shares in the company at the same valuation as the latest round. Coinbase edged higher in late trading after the crypto exchange reported a 20% plunge in fourth quarter revenue as falling token prices sapped trading activity. That contributed to a net loss of $667 million compared with a profit for the same period last year. The stock is down almost 37% for the year, tumbling on the latest bout of selling in Bitcoin. We have more ahead on the Asia trade. This is Bloomberg. Broad risk-off day across Asia today. We're seeing the MSCI Asia Pacific Index down 0.7%, and all of this as we continue to really focus on that tech sell-off, which has spread to those logistics companies, from real estate companies, from insurers, of course, in the overnight session. We do have some of those gainers as well, the likes of Kioxia, for example, forecasting better than expected full-year operating income. Some of those chip makers, especially around the memory sector, they're still gaining ground. We're looking ahead to the China Open. You can see A50 futures pointing to the downside, finish down 0.7%. The offshore yuan seeing its longest winning streak since February of 2024, and TAIEX futures pointing higher. Of course, the US and Taiwan just finalized a trade agreement to cut tariffs and boost market access for American products in Asia. That's it from the Asia Trade. The China Show is next. This is Bloomberg.